Federal Reserve is signaling it will announce just one interest rate cut next year in 2026. Yesterday, the central bank cut interest rates by a quarter percentage point for the third straight time, bringing the federal funds rate to its lowest level in more than 3 years. Mark DeCambre joins us now. He is the editor-in-chief of MarketWatch and can tell us what's behind all these numbers. Good morning, Mark. Great to have you with us. This is what was expected yesterday, but why did they opt to cut rates by this quarter percentage point, and what else was said about what the real state of the overall economy is?
I think the Fed and certainly Jerome Powell are concerned about the job market, the labor market, and they want to shore that up. That's one of the main reasons why they sought a quarter point percentage cut, even though inflation is a little bit higher at around 3%. Than the Fed would like. The Fed prefers inflation to be around 2%, and its dual mandate is price stability and making sure that the labor market is strong. Right now, there was some questions, as I said earlier, about the strength of the labor market, and there hasn't been, up until now, a lot of visibility around the health of the labor market because of the government shutdown.
And we know that, this is, in a way, backwards looking, but they're trying to do the right thing to be forward looking. And Chairman Powell did acknowledge that President Trump's tariffs are putting negative pressures on the economy. But even with the dissenters behind this vote, I guess there were 3 members of the Fed Open Market Committee who dissented from this decision, but they did it for different reasons.
Right.
What does that tell us about the different ways we could go and how this necessarily is not the only option?
You're looking at a pretty fractured Fed, FOMC, as you described it, and we had 3 dissents. We had Stephen Mirren, who wanted a 50 basis point cut, half a percentage point cut. We had Austin Goolsbee and Jeffrey Schmidt, who didn't want to cut at all. Mm-hmm. But in addition to that, there were 4 other Fed members who basically acquiesced to cutting this round. They wanted to keep things steady. So what we're looking at is a Fed that could go a number of different directions. There's a lot of uncertainty in which mandate to focus on. Powell seems to be steering, again, at the labor market and hoping that the tariff impact starts to fade as we go into 2026. That's the open question. We're going to see more data coming up.
And is this why they are signaling only one rate cut for all of next year? What else is behind what they're saying there?
Yeah, I think they want, as Powell described yesterday, they think that the neutral rate, the rate at which the economy neither drives stronger or weakens is where it is now, right? So they think that they need to get more data in order to determine whether or not they need more cuts or they need to sort of just, pause and wait to see how things play out. So they're being a bit conservative because of that lack of data, because of questions around where tariffs end up. So that's pretty much the game that Jerome Powell is playing as well. One other thing to note is that as we go into 2026, Powell only has 3 more Fed meetings before another new leadership comes in, and that could change the dynamic of the Fed considerably.
Fascinating to see what's happening behind the scenes.
Absolutely.
They seem as confused as the rest of us, and they're the experts. Mark DeCambre, thanks for being here with us.
Thanks for having me.